Hey everyone, my name is Erwin Cito, and I wanted to share with you why I bought Airbnb stock on the dip. So first off, I have to explain why I came to that decision. So I read the news a lot. I have a lot of money invested out there. A lot of that money in investments means a lot to my family and my kids' future. So I read a lot, and including I've been following this economist. His name is Benjamin Tall. He's the deputy chief economist at CIBC World Markets. I've been following him since 2008. I've made a lot of money following his interpretation of the world and the economy in general. So from this article, I'm just going to skip through some of these points. This is from a presentation I gave to my real estate meetup over a month ago, and what stood out to me, for at least for this presentation, is Ben Tall mentioned that there is a 20 to 25% over demand for goods and under demand for services. What he means is, when you buy stuff on Amazon, you buy a new scooter, you buy new jogging pants, right? That was really common during the pandemic because people couldn't go anywhere. People were stuck at home. People were working from home. Versus when pre-pandemic, a lot of people would go to work, and then on the way to work, they go buy a Starbucks, they go buy breakfast from McDonald's, they go out for lunch with their coworkers, and they dress differently, right? So as the world opens, as restrictions loosen, people will return back to what they used to do, right? And also they'll probably do a little bit more. For example, travel. A lot of people haven't been able to travel. So when restrictions end, we're going to see a lot more people traveling, going to restaurants, going to gyms, stuff like that. So here is, again, when I'm researching, I research a lot. I read as much as I can, really. So, and I don't believe any single source. I think it's the biggest mistake anyone can to do is to just believe in a single source of information. So, for example, I was reading this report from TD, right? I think everyone knows who TD is, TD Economics. So you see here from this graph. So let me explain this graph. So this is a graph of the last 20 years comparing goods demand versus services, right? So the goods is the lighter green line. And so you can see where it dips down really low. That's the beginning of the pandemic, right? And then you see, and it's gone only one direction since, straight up. Demand for goods has gone crazy. Whereas you see the dashed line, the demand for services has come down. The price for services has come down just because there is not many people are going to restaurants, traveling, going to hotels, those sorts of things, right? And then here's this other piece of information, again from TD. Canadians have more savings in their accounts than ever, right? This shows personal deposits. So because people aren't traveling, going to restaurants, they're saving money. They're not going to the gym, so that money just sits in their savings account. Some of it does. Some of it gets spent on goods like Amazon, new jogging pants. I'm wearing jogging pants because everyone works from home these days. and then to share specifically, TD, quoting TV, consumers have built up 300 billion in excess savings, so above normal savings, because thanks to the pandemic. So what do you think is going to happen when restrictions end, right? And again, I take in lots of information. This gentleman is Stephen Poloz. He's the former governor of the Bank of Canada. He also believes that inflation will be easing throughout the year. He said, again, you can see here in the article, actually quoting him, we'll see more clarity on inflation from 6 to 9 months out from now. Also, he's thinking that things will ease, as in prices will come down, restrictions are going down. So then I formed a theory on. So actually, before I mention that, whenever I'm taking in information, I'm always looking to see how can I take advantage of it. How can I profit from my knowledge? Right, knowledge is power. So I developed a theory on Airbnb, based on what I've been seeing in the world, what I'm reading. People have been cooped up during the pandemic. People are restricted in movement. They can't travel. People's preferences are changing. They don't want stuff anymore. They want to have experiences, and they're flush with savings, right? 300 billion excess savings. Restrictions are easing all over the world. You see it in Europe. You see the Americans have eased really early. Canada, we're easing. We're pretty early into our easing. I have friends that own Airbnbs. They own and operate Airbnbs. They tell me that demand is big, and the demand is so big that they've been raising their prices, and the demand just stays. So that's a formula for making money, right? Airbnb crushed Q3 earnings. This is something I also predicted because restrictions were easing, especially in the States. So Airbnb as a company made record profits in Q3 of last year. And also more recently, there's been a correction in the tech stocks, and Airbnb has been dragged down. So I actually have a price chart for you. So this is a chart showing the price of Airbnb over the last just over a year. So remember I mentioned that Airbnb crushed Q3 earnings last year, and that's what the arrow indicates. You see that the price just jumped up. The price went up well over 10%, right? And then since then, there was a stock correction. You can see Airbnb gave back all those wonderful stock price increase, gave it all back and some as part of the correction in the tech stocks in the stock market. And then based on my theory, based on how I see the world, I decided to buy some shares. I bought some shares at $145. My plan was I'm okay to hold these for the long term, 5-10 years. And then just recently, my theory proved correct. Their earnings for Q4 for the end of 2021 were fantastic. And then so I took profits the day after earnings were announced at $182. So I actually have that all here. I always prefer to show than tell. So this screen capture, I took this from my statements. And just to explain what you see here, I bought shares at $145 per share on January 25th, 2022. I sold the shares the day after earnings for $182.03, right, on February 16th. How the return works out is $37 per share or 25.5%. I, of course, am very happy. I would be much happier if I had a lot more shares. Also, just to share on the dip, I also bought McDonald's, Microsoft, Nvidia, and Disney. They're all green. They're not nearly as same return as Airbnb though. And so thank you for watching. If you're interested in learning more about what we're up to, what we're sharing, what we're learning in the stock world and the option world, please like and subscribe. If you're interested in learning more, how I can best help you is we offer a free case study. It is the ultimate side hustles for Canadians, and the link is below. We actually did a case study of a gentleman who does multi-level marketing, who has an Amazon business, who does stock hacking, and also is a real estate investor. So we break down the numbers in terms of return on investment, both on your money and your time. So it's available for download for free. Link is below. Please enjoy.